What's going on, guys? In this video, we're going to talk about the boring topic of risk management. Now, when it comes to trading futures, when it comes to trading equities, when it comes to trading cryptocurrencies, Forex, whatever it is that you are day trading, risk management is the number one key and sole focus. Forget about the strategy. There's a million strategies out there that all provide a little bit of an edge. What doesn't provide a little bit of an edge is when your risk management skills are completely out the window. So, with many of us who are trading futures, many of us are utilizing prop firms. Why utilize prop firms? Well, the advantage of getting that buying power, that leverage, not having to put up your own personal capital and risking, loading up $2,500 into an account and blowing it all in one day, right? Most prop firms will offer you a 50K funded account or evaluation for about 25 to, let's call it $50. Okay. Most firms are going to be in this ballpark. Some firms might be a little bit more. Let's go all the way up to 75 bucks. So with this amount of initial investment, okay, you're getting access to 50K worth of quote unquote buying power. Here's the kicker. Forget about this. Your real leverage, your real drawdown, the real risk that you need to manage is about $2,000 to $2,500. This is what you need to protect, okay? $2,000 to $2,500. So if you're going to protect $2,000 to $2,500, you need to create a plan, okay? So you need to create a plan that's going to enable you to stay in the game, okay? Because let's be honest, if I was to bring up today's price action, okay, let's see if we can bring it up very quickly here. If we bring up today's price action, this was absolutely brutal. I mean, absolutely brutal. We got an immediate trap to the downside off the open. We got an immediate spike followed by 20 points up, 20 points down in the same candle. It was absolutely brutal. So when it comes to managing risk, you're going to run into days that are completely unplanned. Okay. So when you run into days that are completely unplanned and just price action is not going to plan, you've got to have an actionable risk management plan in place. So utilize this simple math. Don't forget it. For a 50K account, if your profit made on that account is less than $1,000, you should be risking no more than $200 to $300 max per day. Okay, this is PD for per day. Okay, this is a non-negotiable. Okay, until you make $1,000 in profit, this is a non-negotiable. So everyone, when you sign up for an account, you got a $50,000 starting balance, you got a $2,000 or $2,500 drawdown, regardless if it's an evaluation or it's a funded account, your max loss per day is in this ballpark. Now, from this, we need to figure out, are we going to trade size that if we're wrong on one trade, we're going to be willing to risk this amount? For some of you people who have a little bit of a stronger appetite for risk, then yeah, maybe you're thinking about putting on 5 MNQ contracts, okay? And maybe you're thinking about risking 25 points, okay? Let's say you're risking 25 points per trade. Well, that's going to be times 2 is going to be $50 per micro contract, okay? So $50 per micro contract. And if you're trading 5, you're going to lose about $200 to $250 depending on slippage, depending on fill time, this, that, and the other, right? So if you have a heavy appetite for risk, then maybe you're in the ballpark of trading 5 micros. If you are a trader who is trading a 50K account with $2,000 or $2,500 drawdown, and you are risking a lot more than $250, $300, maybe you're risking $500 per day, $1,000 per day, you are cutting it very, very close to just being absolutely obnoxious with the risk management. And the odds of you being able to sustain that amount of risk for that size account are slim to none. Am I saying that you can't do it? Absolutely not. Could Could I see and have I heard of people risking the entire $2,500, maybe trading 1 to 3 minis, and then just absolutely nailing an amazing trade for, let's say, $2,000? That's bringing their buffer all the way up to 4,500? Absolutely. The only problem with it is it's sustainable, right? Is it sustainable? What do you do when you get to 4,500? Do you now start risking 3 to 5? Because if you are risking 3 to 5 minis and you're risking this entire amount, which I think is absolutely horrible to do, but I think a lot of people do this, or even risking half of the 4,500, and they're trading much bigger size to try to grow this balance up extremely quickly. The only problem with that is you're almost taking trades as a ladder challenge. And when you take trades as a ladder challenge, the thing is that you're going to get to an eventual step on the ladder where the trade's going to lose. And when that trade loses, you're going to lose the entire account, okay? So think about a staircase, a ladder going upwards. If you're relying on every single trade to win, risking this amount of money, eventually, because trading is a game of probabilities, you are going to run into that losing trade and you're going to lose the entire account. So if you do something, which I'm going to say is stupid, if you do something where you're risking $1,000 per day or $2,000 per day in hopes of hitting that one big trade to kind of buffer up your balance, please take my recommendation, size all the way back down. Get into 5 micros, get into 3 micros, get into 4 micros, especially if you're trading the NASDAQ 100. You're going to have plenty of opportunities to hit $500 days, $200 days, $1,000 days if the market is cooperating with you. The best way, in my opinion, to do this is to start extremely small, risking no more than $200 to $300 per day, trading no more than 1 to 3 micros per day, and probably risking, again, if you have a stronger appetite, I would risk the entirety. I would risk the 250, 300 on one trade to try to make at least 1-to-1, $200 to $300 on a trade, and I would call it a day. And I would try to come back and repeat that process for 2 to 3 weeks until my balance grows, and then I can eventually size up. If you want to play it a little bit different, where you're going to not risk the entirety because maybe you want to take 2 or 3 trades, then maybe trade 1 or 2 micro contracts and maybe risk anywhere between $60 and $100 a trade. That's going to give you 2, 2.5, 3 trades minimum. I think in the beginning, if you're taking more than 3 trades and you're not having success, meaning you're not finishing 2 or 3 trades in the positive, it's probably better for you to walk away anyways on that day, because for whatever reason, if you lose 2 or 3 trades in a row, you're just not seeing the market clearly anyways, and it's probably in your own best interest to come back tomorrow. Guys, Apex right now is offering 80% off on their evaluations. You can use code DAnthony. If you want to join Evolution Traders, that link is down in the description box below. We do live trading each and every single day. I offer a mentorship program along with a course to kind of study. That's in the description box below. Make sure to subscribe. Make sure to hit the like button. Make sure to leave a comment. Let me know how you guys did today with that price action in the first 30 minutes of the market. It was absolutely brutal today. With that being said, I'll catch you guys all on the next video.